Bank has come out with their World Development Report 2020 that examines the path to development through global value chains and, of course, trade. To talk about that and a lot more, joining us now on ET Now is the Chief Economist at World Bank, Aaditya Mattoo. So thanks for taking your time out and speaking to us at ET Now. We're talking at a time when India's GDP has taken a knock. We are at a 6-year low for the second quarter, coming in at 4.5%. And many are talking about how for the whole year we could be very well below the 6% mark. We're still talking about that India has to reach the $5 trillion economy mark. How difficult is it for us to walk on that path given the current growth concerns coming in?
I think the world is witnessing a growth slowdown. It is witnessing the twin threats of trade protection and the risk of automation, which could undermine traditional growth models. But India has tremendous potential. And when you think of our report, which is about global value chains, we show how India has in some ways overachieved and in some ways underachieved. And I think it's in a way remedying those past choices and making the most of its tremendous potential that I think should occupy us more.
So when you're saying that India has underachieved in certain aspects and overachieved, which are the areas where, for us to be able to get to the $5 trillion economy mark, the areas that we should be focusing on?
So it is, in the report we talk about different transitions on the path to development. The first is from producing commodities, whether it's cocoa or copper, to more basic manufacturing, whether it's clothes or shirts and shoes. And then onwards to more advanced manufacturing and services, and finally to the more innovative, cutting-edge goods. India made that first transition to basic manufacturing, but didn't fully exploit its potential. And that's where the biggest kick to growth comes. We estimate that as much as 1% higher participation leads to 1% higher growth. And that's where the jobs are generated, because those are the most labor-intensive industries, whether it's apparel or leather goods. It has in some sense made a precocious transition to more advanced manufacturing in areas like automotive parts or pharmaceuticals or sophisticated services, and that has delivered growth, but that hasn't delivered the same level of employment. So it is in a way deepening its engagement in that first stage of basic manufacturing while consolidating its achievements in the advanced stage that I think is the main challenge.
So, that's a very interesting point that, you've raised, and we in India are talking about how we're really flirting very close to a recessionary trend with respect to our manufacturing sector growth. Is that something that the Indian government should squarely focus on now?
I think the report speaks less about cyclical variations in countries' economies and more about longer-term development prospects. And there's no doubt that the manufacturing sector is craving for reform, whether it's in land, labor, logistics, or the choice of trade policy. I think there is tremendous scope for reform in all these dimensions, as well as for international cooperation. Because that has this dual benefit. On the one hand, it can spur domestic reform. On the other hand, it can secure access to markets. So to work on all these dimensions in a way to try and reform the domestic economy, as well as to exploit the gains from international cooperation, I think there's no doubt that manufacturing would benefit from it.
Aaditya, there's a very interesting bit that I saw in the report where you've said that the economic fundamentals drive a country's participation in global value chains, but policies are the ones that enhance participation. With India's economic fundamentals now weakening and, of course, the big policy uncertainty coming on various fronts, is that a double whammy for India?
I don't think India's economic fundamentals are weakening, they're unexploited. The point of the report is that your participation in global value chains is determined by what you have, how much labor, what type of labor, how much capital, how much technology, where you are, how big you are, what kinds of institutions you have. But we also argue that you don't need to be a prisoner of what you inherit. You can shape your destiny by sensible policy choices. For example, your locational inadequacies can be remedied through policies that improve connectivity, liberalizing transport, communication. Your market size can be remedied by liberalizing at home, giving your producers access to the best inputs.